Hello everyone and welcome to our buy-to-let property investment hotspot series. This is a series of videos where we really look at different towns and cities across the UK, try and spotlight one of them. Today's video is going to be about Isle of Wight, to try and see what buy-to-let property is like in the Isle of Wight as potential long-term growth prospects for that particular area. So there's a couple of things to consider in terms of this data. It is data led, so we have a spreadsheet here which we pull all the information in for this particular area and postcodes. You can see here all the postcodes and stuff that we've looked at and the data that's being kind of considered. So I'll go through that shortly with you, but just really to kind of showcase that it is data led. It's not based on any particular local knowledge of the streets or the postcodes, let's say, within any given town or city. There's lots of different options around the UK of different places to kind of consider to invest. We're not trying to say that this is fundamentally the best place across the whole of the UK right now to invest. What we're trying to do is just really look at the detail for any given town or city and see what the data is suggesting. If you were to consider that area, what postcodes maybe to kind of consider and why. So we'll go into a couple of things shortly in terms of what data that we're kind of looking at. But fundamentally, Isle of Wight here as a location, it's quite a big area, covers lots of different postcodes. It's an island based off the south of England and primarily quite a tourist kind of hotspot. Now there's lots of other reasons to kind of live and work there as well, but you can see here we'll just before any of these kind of videos spotlighting an area, we'll just see what the tourist information website looks like. Gives us a flavour of that particular area and what type of things they're focusing on. So you can see here it's kind of stunning coastlines, unique experiences, and we'll do the same again from Google Images. It's quite an easy way to try and get an idea of what the local location is like if you're not from that particular area. So Isle of Wight, looking at Google kind of images, you can see here coastlines, beaches, different tourist attractions. That's kind of the main selling point, let's say, as to what Isle of Wight looks like from the outside looking in with Google and its tourist kind of website. So now if we look at kind of what the data says and really to see if Isle of Wight could be a buy-to-let property investment kind of hotspot, we'll see what sort of postcodes really shine in this kind of series. Now before we get started, there's a few kind of disclaimers here. Now this is not financial advice, so please don't take this as kind of a given that you should absolutely buy in this location. It's not that at all. There's lots of different reasons why you should buy property and not buy property. Lots of different areas that you kind of should consider, and you should really do your own research. This is just meant as a starting point to give you the data and the information that our own team look at when we're trying to assess new property locations. Also, this is based on third-party information. It's not fact-check data. We've not fact-checked it with other sources in any way. It's just using publicly available information from websites like Zoopla and home.co.uk. Property, like any other asset, is risky. It can go down in price. So please don't take the maybe historic performances and the historic data that we're showing in these kind of videos as an indication that you're going to definitely get future gains or guaranteed kind of future returns. That's not the case at all. As you said, property is risky and it can go down, and historic data and estimated data that we're using in this data set is certainly not an indication of future performance. Also, each development is going to be different. So even with these sort of data-led videos where we're going to be looking at a particular town and a city for its kind of buy-to-let potential merits, you might find a location that you like, but a development or a property that you're considering in that area, if it's a bad property, it's still going to be a bad property even if the location's good. So you need to do your own research within any particular property and development, even once you've selected your area. And then finally, really, it's just a bit of a showcase of the different types of data we ourselves use, our team use, when we're trying to assess locations, and also when we're speaking to other investors that are local to their towns and cities, investors that are based out of areas or across the whole of the UK, and investors that are based overseas. The questions that we get asked, the information that they tend to favour and they tend to look at, we've tried to kind of combine that knowledge into this kind of data set. Now, final kind of indication is that this is average data, so you will have properties that you find that can perform better or worse than this kind of data is alluding to or indicating, because individual properties are always going to be different than average data. Also, postcodes cover very large areas, so you will have outliers within this kind of information. It's not kind of a guarantee, as we said, of any definite future performance. We're just trying to showcase the data that we're seeing and hopefully try and map out a bit of an idea as to how locations have performed and what the future kind of may or may not hold for them. Now, there's lots of different data to go through, lots of different kind of content to go through. So as a quick kind of indicator, is Isle of Wight a buy-to-let hotspot? The data certainly looks very positive. There's postcodes within the Isle of Wight area that we would probably favour if we were to do some further research on them, to show you which postcodes they are, so you can just do a quick version of this video if you wanted to. The primary postcodes that we're considering in any of these kind of videos is going to be highlighted in blue. Secondary postcodes highlighted in orange or kind of gold colour here. So you can see here these kind of postcodes across these columns: PO31, PO32, PO36 and PO40 we've highlighted in blue, so they would be our primary areas within this location. And then secondary areas, so certainly worth further investigation. I wouldn't discount them at all, and I would certainly consider them as possible locations. PO33, 37, 38 and 39 are also worth kind of considering. Now, our team has gone out and looked for potential properties, developers, agents and platforms that cover this sort of these sorts of postcodes that have performed well in this data-led research. And we have found one that is available in PO40 that seems to offer an opportunity right now. So if you are interested, then you simply need to, or you can simply click on the link below this video, or the button below this video, depending on where you're viewing it, and it'll take you to that property project where you can see more information about that specific property. So if you want the quick version of this video, as you said, these postcodes here seem to be performing very well based on the data. And if you want to go straight to a property that's available, and just simply click on the link or the button below and you'll get access to that property straight away. And if you do want to stick around and look at the data, please do so, and I'll kind of go through that with you now. So how we've tried to kind of lay out the data is we've got three core kind of results sections here. So we've shaded here the baseline for the area, so Isle of Wight at the top, and then the postcodes below that are going to be shaded here in this blue and orange colour for your primary and kind of secondary postcodes to consider. So primary postcodes, essentially they've passed 4 different growth metrics, all 4 out of 4 that we've internally decided and kind of created for how we select new locations. And secondary postcodes we've got here, they have passed 3 out of 4 metrics, so still worth considering. And these are the growth metrics that we've fundamentally kind of identified. Now there's lots of different data that you can look at. You can look at population growth, you can look at average incomes for area, you can look at affordability, so times ratios of what prices properties are and what income and affordability might be any given kind of location. The downside to that is it's very hard to try and show direct correlation between historic growth and when prices have gone up, or when prices have gone down and local markets have stuttered as well, because you have so much data to consider. There's lots of things that will influence a property price. There's lots of things that will influence a location and how that might kind of develop over a period of time. Both macro and micro data is going to play into that. What we've tried to do is choose 4 key criteria, 4 data sets that are easily accessible, they're free to access, and they're typically provided by well-known resources like Zoopla, so that you know that the data is going to be more accurate and more consistently updated. Not only that, but it also shows good indication for different metrics. And what we try to focus on here is past performance, market growth, so what prices properties have been marketed at, sale increases, so what prices properties have physically sold for and how that has increased or decreased over a period of time, and then just the local demand, so what is the current market demand for properties in that area, and that's shown by how quick properties are selling in any given location. Hopefully this kind of group of data set just allows us to see independently any given area, so we can kind of compare a postcode in London to a postcode in Manchester, for example, or a postcode in Birmingham to a postcode in Leeds, and just see independently what the data is kind of suggesting. And what we've tried to do is not only identify what we want to consider, but also some past metrics. So what will identify whether that area is performing kind of well or not. And these again aren't allocated on any specific proven kind of rule, if it were. These are just internally what we try and achieve. So I'll go through each one of these now and show you exactly what we look for and specifically kind of why. So first up is what we class as kind of a heat map, and this is for the first kind of growth criteria, which is historic performance. So we want to really see how the location has historically performed, what sort of local high value areas are within a given town or city, and really why that might help in the future. So to do that, we're using mouseprice.com initially, and then we'll also use zoopla.co.uk. So if you first of all are looking at a new area and you want to use this kind of same criteria, you can use any of these links. All these links will be below this video and article as well. We get the links for postcodes currently using kind of Wikipedia, very easy to kind of use and find. So these are the postcodes that have been identified for this area for Isle of Wight. And if we go to our first kind of website, we can see a heat map of that particular area. Now I'm not going to go through the specifics of all of the different kind of tools and different ways you can use MousePrice or Zoopla or the other sites. I'm just going to focus specifically on the data sets that we've kind of created. So to understand really how an area is performing, where we have seen the most growth across our own portfolio and also properties when we've tried to assess them independently and areas when we try to assess them independently, heat mapping is a great tool to kind of do that. What this fundamentally shows is a given area, so you can see here Isle of Wight. Dark reds are going to be high value property prices. Dark blues are low value property prices, and then you have a scale in between. And that's where we really start to look at, and you can change the transparency here if you want it to make it a bit easier to use and read. What we're trying to find really is dark blues locations tend to perform quite sluggish over a period of time for growth. Low value areas might be lower quality of houses or different types of tenant profiles, or just certainly lower value in terms of the prices for the area. What we try and find in a perfect world is affordable prices for properties. That gives us a good rental yield, but on nearby areas of good house prices, because what that might mean then is if you have an area here, for example, that's showing up as dark red, high value properties, but an area here that's slightly lighter, so maybe green or lighter blue, these properties could be more affordable, more accessible, higher rental yields, and people that can't afford to live in this kind of higher value location may end up buying locally in these sorts of areas because they are still close by for work or family life, but more affordable and within budget. And by having the higher value prices, that helps push up the prices in terms of the ceiling value for any given area, and that is an indication what we've seen historically is performing quite well for kind of growth. So we try and use that as the starting point for any new location. If it is just a dark blue area and it's surrounded by other light blue areas, it's probably not an area that we would focus on as potential for growth. If it's a light blue or even a dark blue, but it's surrounded by lots of higher value properties, then that may be an area to consider further. So we use MousePrice first just for the area, primarily because it shows us a clearer view and snapshot of the whole location, so Isle of Wight in this example. But then we would drill down further using the heat map from Zoopla.co.uk. So this is just a straightforward Zoopla search for properties in this particular postcode. So we're starting with the postcode at the top, PO30. It will come up usually with a listings. If you click on the map icon instead though, that then shows you the properties based on a map area, and then you click heat here and that will give you the heat map version. Now the reason why it's not showing up with any properties is because we've set the price range here as a minimum of 15 million, and that's not because we're looking at properties in that price range, it's just because we want to try and make the map clearer and clear out all of the pins and stuff that would be shown as the properties. So if we were to scroll out, the downside with Zoopla for the heat maps is the way in which it shows the imagery. It's quite hard to try and pinpoint particular detailed locations when you're further afield. If you scroll in, it gets much clearer and a much better indication. So you can see here this kind of purple line is the postcode location, but now we're a bit closer, we can start to see a little bit clearer what the price differences are going to be. So there's no specific rule of thumb here. We're not looking at any particular percentage or number. What we want to find is really just high value areas, good value locations that are close by to affordable areas that could be a fit for us for our buy-to-let properties in the Isle of Wight in this example. So this particular postcode passes that criteria. If we go back to our spreadsheet, what you can see here is Isle of Wight as an area generally is pretty positive for the heat map, and actually all of the postcodes pass. So on some locations that we've done, some of the postcodes don't pass. If they've not passed our initial criteria for heat mapping, then we wouldn't really progress with that location possibly any further. Primarily here we're not looking at yields, we are looking at potential for house price growth over a period of time. There's no guarantee of that, but what we can do is try and use the data before we choose the properties and before we kind of make our purchases to try and get hopefully close to a result that's going to be positive over a long period of time. And all of these postcodes look quite good from a heat map perspective. If they pass that, then we can start looking at the next set of data. So specifically, as we scroll across here, you can see how these columns correlate specifically with these kind of postcodes. So we've frozen these kind of columns, so as we scroll across the sheet, you can still see the data in line with those particular postcodes. So first of all, what we're looking at here is really the growth of the area based on actual property prices and also percentage values. Now there's a couple of columns and stuff to take into account here. Specifically, there are certain columns that we are really interested in looking at over and above others, and I'll explain kind of why that is shortly. So to get this data, first of all, we are on Zoopla again. If you go to house prices and values, and then just put in the postcode, and that'll bring up the data that we're going to be looking at. And this is effectively all of the information here in this top box, this market activity box. And now, as mentioned earlier, there's lots of different websites, lots of different data sets and stuff you can use. Primarily we use this because well, for lots of different reasons, but it's easy to access, it's easy to kind of understand, and typically the data is kept up to date frequently. So you're on top of any latest kind of changes, really. So the main criteria that we're looking at here, you can change the years, you can change the property types. We want to keep it relatively generic for property types, just specifically in this location. And we are looking at fundamentally the average price paid and the value change. Now these are two distinctive data sets that are different and look at different metrics. So first of all, average price paid is going to be focusing on property prices that have actually sold, what prices have people paid for properties in that area. So that's very important to see, not just potential growth that's happened over a period of time, but shows the actual growth, so what prices people paid. The value change is more based around the current average valuation of properties and what the previous valuation of properties were. And this is more like a marketing price. You can see here the Zoopla Z index is what it's kind of based on. It looks at different criteria sets, but fundamentally it's the property prices, or marketing, prices for a given area. And that'll be clear as to why we kind of made that distinction when we look at the data in a second. Three main timeframes we're looking over is 12 months, 5 years, and 10 years. 12 months gives us a snapshot as to what's happening currently. 5 years is quite a good indication as to what it's done historically, but relatively recently. So any trends, maybe an area is very up and coming, maybe it's had lots of investment locally, and we should hopefully have seen that within that time frame. And 10 years gives quite a good snapshot as to its overall performance over a longer time frame. So that's why we look at those kind of criteria. And then what we've done fundamentally is just brought all this data into the spreadsheet. So we check for each postcode, check for each of these elements, so the value change as a pound value, the value change as a percentage, and then the average price paid as a pound element. And then we look at it over 12, 5, and a 10-year time frame. Now there's different ways that you can kind of try and correlate or consider this data. The main set of data that we're really focused on is this here. And then also a bit further on these figures here. But just to kind of focus currently on this column here, what this tells us is over the last 5 years, the marketing values of properties has changed by these sorts of percentage amounts in these postcodes. Now, there's no rule of thumb that says if it's above this amount, it's very good. If it's below this amount, it's very bad. What we've tried to do is just look at the data independently across lots of different towns, lots of different cities, and really just see what the data tends to kind of allude to in terms of historic growth. The calculation that we've set is about 18%. So if we see an 18% increase in that particular postcode over a 5-year time frame in the current market, so this video is being created in July 2018, this data, this rule of thumb, the kind of the figures and stuff that we're looking at now will certainly be different in a market that's very static, or in a market that's rapidly growing, or in a market that's rapidly declining. It's just in this snapshot of time. So in 2018, based on what we're seeing across the UK, based on lots of different metrics, lots of different things that might change values, 18% increase over a 5-year time frame for the last 5 years for value change seems to be a positive indicator for most towns and cities. So if the postcode was below 18%, we wouldn't really consider it further as a potential, let's say, for our buy-to-let kind of opportunities if we were buying in that area. If it's above it, then we would hopefully, in line with the other metrics, start to consider that postcode a bit further. So you can see here, this particular postcode, PO30, isn't color-coded. So it's not passed all of the metrics, or even the majority of metrics. It's failed on a couple. Now, it has passed the heat map, which is good, and it has passed this value change, which is good. It's higher than 18%, but it's not been color-coded because it falls down on some of the future or other metrics that we're going to look at shortly. All of these postcodes, though, have passed this 18% increase, which is kind of good. So as I said, that just gives us an idea as to how the marketing prices of properties have changed in that postcode over a period of time. Next up, we're going to be looking at these columns here, and this really looks at percentages for the average price paid in the time frame of 5 years up until the last 12 months, and then also 10 years up until the last 12 months. Now, this is an average price paid. So if we go back to the data and we look at, say, the last 12 months here, this particular postcode, it gives us an average price paid of $205,000 over the last 12 months. So to consider what that data actually means, basically all of the properties in this postcode combined together, average price of properties sold and paid is $205,000 over a 5-year time frame. That's not looking at a percentage increase, let's say, from 5 years ago to today. It's just combining all of the properties over a 5-year period and giving you the average price paid for that, and then also the same for a 10-year time frame. So if we were to go from 10 years to 5 years, it's only gone up 9,000, which is a small percentage, but the actual price paid 10 years ago compared to 5 years ago as a percentage would likely be higher than that. It's just because they're pulling in all of the data from every single year and fundamentally bundling it in together, which gives you that kind of data set. What we've then tried to do is pull out a percentage on this. So we've created our own formulas. You can see here what this formula looks like, which in this column here, 5 years to 12 months, it's basically this price here, 230, and this price here, 218, and trying to see what the percentage difference is. And it's a 5% difference. So you may have had higher than 5% sold price growth, but we are looking at averages. We are looking at combined averages, and just in this snapshot in time. Again, there's no rule of thumb that is identified as a gold standard as what that growth should be. We are just looking at really different towns, different cities, and the metrics that we would like to see achieved is about 5% in this column here. So any properties or any postcodes, sorry, that are below that 5% level wouldn't pass this kind of criteria. So as we mentioned before, PO30 did pass the original 2 metrics, but it falls down here on the growth over a period of time. So average price paid 5 years ago, 199. Average price paid 12 months ago, 205. Not that much growth in that period of time as allocated or as seen here. Anything over 5% we feel is a good growth. 16% here for this postcode, so PO39 has performed very well. So 5 years ago the average price paid was 243. Only up until 12 months ago it was 292. So very good growth in that area. Now that doesn't mean it's going to continue. It doesn't mean that you should fundamentally only go for PO39 in the Isle of Wight for your buy-to-let property investment. It's just trying to give you a bit of an indication as to how all of these postcodes have performed against each other, really. And for us, anything above 5% in this column is a good metric. So that's the third metric that we're going to be looking at. And then the final metric is really how quick properties sell in a given area. And for this, we use the website home.co.uk. So if we go back to our websites, go to home, you have lots of different data that's shown on this website. It's very good if you're quite analytical and want to kind of pull out different information. Specifically, though, we're focusing on how long properties take to sell. So this is the actual data from when a property comes on the market to when it reaches a sold status, as indicated here for this postcode. And you have mean selling time and median selling time in days. We typically choose median because it strips out any of the outliers. So if properties are, or a couple of properties are selling really quick, or a couple of properties are really slow, that doesn't skew the total data for that area by using the median criteria. So that's the data set that we tend to look at, and you can change location here and get different data for each postcode. So we've pulled that information in here, and you can see how long each postcode takes to sell in days based on a median selling time. Again, no gold standard rule of thumb that analysts or websites or other companies will tell you to kind of aim for. We've just got our own internal criteria that we try and achieve. And for us, that's about 60 days. That gives us a clear idea as to how quick the local market is moving, how buoyant it is, how active it is. So anything below 60 days is a good sign. So again, this PO30 postcode fell down on house average price paid growth, and also fell down on how long currently properties are taking to kind of sell. So it didn't pass those metrics. Hence, it's not kind of color coded as past those kind of metrics. However, these postcodes here have. So this one's 47 days, this one's 58, and this one's 92 days. So 92 days, 81 days, 91 days, these columns here, or these cells here, are all higher than our target selling time. If you want to see our targets, they're again at the top of this sheet. So sale time less than 60 days. So if they're higher than 60 days, why have we included them, let's say, as passing our metrics? And that's why we have blue as color coding for properties that have passed all of the metrics. So PO31, PO32, PO36 and PO40 have passed all of the metrics that we've identified internally and that look like good areas to consider and do some further research on. PO33 and then these postcodes 37, 38, 39 have passed 3 out of the 4 metrics. So they've fallen down on one of them but passed all the others. So if we were to identify, say, PO37 here for now, it's positive for the heat map. That looks good. It's got very good historic market change in prices. So over the last 5 years, the market value has gone up by 27%. That's good. Our metric is 18%, so it's quite a good growth. And if we scroll across here, over the last 5 years, you've got a 5% increase in the average price paid. Again, quite a good indicator. However, it's taking a little bit longer than what we'd usually like for properties to kind of sell in that area. And there could be a whole host of reasons for that. As I said, postcodes are big areas. You will have outliers. So I wouldn't discount those postcodes. I'd have a look at them further. And then maybe you find a very good development, a very good property in that postcode. There is potentially a property that could sell much quicker than what the average sells for. So if you're in a postcode with lots of detached houses, they may take a bit longer to sell. But if you're buying a terrace or a flat, it might sell a bit quicker. So that's when it comes down to considering the actual developments on an individual kind of basis. But I hope that helps. Hope that gives you an idea as to kind of what the data says and how we've created the data, how we kind of mapped it out, and our own kind of rules of thumb really as to what we're trying to see. So that's looking at these results here. And it gives us these postcodes as ones to consider further. So if you are looking at buy-to-let and you are considering Isle of Wight, these are the postcodes that are performing quite well from the data that we've identified. Now it's also obviously important to then go on and find the properties once you've allocated or chosen any given kind of area. Our team has gone out and looked at different developers, agents, platforms that cover currently the Isle of Wight area. Within that research we found a project that is in PO40, so a postcode that fits the criteria. And if you wanted to look at that project further, you can do so. We've got a link below this video and a button below this video. You can simply click on that. That'll take you to that project with further information. Simply click on that. That'll give you some more detail. It's not a project that we're selling directly, so you would need to do your own research on that particular property and that particular development, and also the area. Make sure you're happy with it. It's a third party that is selling that development, but so if you click on the link below, that'll take you to that property deal. Hope that helps. Hope that gives you an idea and a bit of a flavour as to what the buy-to-let kind of market is like in the Isle of Wight and what the potential property investment kind of landscape is in that area. Any questions, as always, don't hesitate to ask, and look forward to catching up with you in the next video. All the best. Take care.